One of the kind of key lessons that I hope that we'll be able to get across, I'll be able to get across for you today, is this transition from what we call a restless entrepreneur to a disciplined entrepreneur. Yeah. Now, what does that mean for us? If I was to summarize that, I would say a restless entrepreneur is a person who has whose ability to generate ideas is far greater than their ability to execute on those ideas. Lots of ideas, lots of things, opportunities, and they seem to always be chasing different opportunities and new opportunities. A disciplined entrepreneur is someone who also has lots of ideas, but their ability to execute on those ideas exceeds their ability to come up with ideas. So it's very important for us as a group and as an organization to shift towards becoming a disciplined entrepreneur, which is to keep the flexibility, which is to keep that idea of spotting opportunities and executing on them, but really to kind of complement that with the ability to execute so that we kind of deliver the returns that are expected. Now, as a group, there are 4 key dimensions that we have focused on to take small businesses that are part of our group and turn them into large multi-billion-dollar businesses. And if we were to summarize them, there would be these 4 areas that you can see on the slide. And what I'm going to do is go through each one of them. The first one is really about governance. As you can see along the bottom of our slide, these are the businesses that we're in. And we have married this with a very traditional corporate governance structure, which you can see on the right-hand side of the slide as you're looking at it, which is the right audit committees, the risk committee, executive committee, and HR committee. We also have committees that are focused on specific sectors. Being a diversified conglomerate, it is very difficult to for one board to become an expert in all the businesses we're in. So we're supported by specific sector expertise that provides us with insights into the markets and into the sectors we're operating in. Another important part is the right-hand side of the screen as you're looking at it, which is basically the family and the shareholder governance. And the important thing here is, as part of being a transgenerational family business, having the family and shareholder governance and creating kind of synergies, but keeping a degree of separation between the family and the business as the businesses are growing in a disciplined and a thought-through manner that is aligned to the family's expectations, is a critical part of allowing the businesses to flourish and for them to grow. So enhancing this governance is something that we've been working very, very hard on under the kind of guidance of our chairman, Mr. Abdulaziz Al-Gharer. Now, a very important point and a guiding principle for this presentation is something that our chairman told us, that treat the businesses with the same rigor and discipline of a publicly traded company, regardless of whether we are publicly traded or not. So the message there was that just because our SMEs may not be large, does not mean we should not treat them and have the same discipline of a large company. Just because our businesses are not public does not mean we should not have the right governance structures in place so they are run as if they are publicly traded companies. So for some of you who are sitting in the audience who may have smaller businesses and you're going to listen to some of the things that we are talking about here, you may think they don't apply to you because you're too small. But the important thing is for you to go from being a small business to being a large business. A lot of the discipline and rigor that's in place is needed. Now, the important part of my job is to make sure that we balance the discipline and the rigor and make sure we don't go too far the other way and have bureaucracy. And we'll touch on that as we go through the presentation. A critical part of transitioning from being a restless entrepreneur to being a disciplined entrepreneur is knowing what you will do and knowing what you won't do. Okay? Often you have to make some very difficult decisions to stop doing certain things, which for entrepreneurs is a very, very hard thing to do, especially if you've nurtured and you've grown a business for a very long period of time. Understanding when to exit out of a business is just as important knowing how to enter into a business. So we have a very disciplined process to look at how we, in the middle 2 bars that you can see on this slide, is looking at growth, both organic growth, in other words, in the businesses we're already in, and inorganic growth in terms of the businesses we buy. The flip side to that is also exiting businesses. The two bars you can see at the bottom and the top in this slide are also very critical. So the first one is operational excellence. And here we're not trying to confuse operational excellence with cost reduction. What we're looking at is driving efficiency and excellence into the businesses so we can serve our customers better. That may require investment. That may require a process that costs more than a cheaper process. The important thing is to understand what your kind of organization is trying to achieve and make sure you're delivering those expectations to your customers. If that means you have to invest a little bit more into a process, then so be it. The last part is capital efficiency. And I think this is something that would be very, very important for this audience because cash flow is a critical part of any trading business. Using your capital in the most efficient manner can be the difference between success and failure. We look at capital efficiency in all of our businesses, particularly from a stock perspective. I think one of the earlier speakers spoke about having the problems of having excess stock in their business. So having capital efficiency is a very, very important part of making sure that you are in the right businesses and you're driving the maximum return for your shareholders. Another part which I think is probably maybe a little bit more relevant to larger organizations, however, I think the principles are still important for SMEs, is having a complete and holistic management model. What does that mean? That basically means how you decide what you're going to do next year and in the next few years, and how you close the loop between your plan, your budget, and your performance management system. In the past, and some businesses tend to have a financial-driven process. So they decide on a budget, and on the basis of that, they make capital allocation decisions. The problem with this approach is there tends to be no business rationale in the numbers. It is just a profit and loss and a balance sheet without any insight into what's happening into the business. What we have been deploying over the last 3 or 4 years is a process that sits at the end, which is about performance management. So specifically what we've done here is we've deployed a management by objectives system so we can clearly identify to the leaders of our organizations, and this is not just the CEOs, but also their direct reports, about what are the objectives that they are expected to achieve in the coming year and over the next 3 to 4 year cycle. It's very important to tie into that a reward system that is aligned to your management by objectives. So the performance management piece at the end is not just about what KPIs and objectives and initiatives the business has to achieve, but it's also about aligning those with the right reward mechanism. If you align the right rewards with the right objectives, you'll get the right outcome. So the performance management piece is a very important piece. Additionally, what we've done is attach a business strategy piece and a business planning piece to the front of the budgeting process. So this is where the rationale comes in. Now, for many of you sitting around this table and for many SMEs, this is going to seem like a very overly burdensome process. And I'm sure for some of you it probably would be. But there is a way of doing this in a very, very streamlined kind of way to understand, basically in this part, what is your plan for next year? We also heard from one of these earlier speakers from kind of the banking sector that for the banks, it's very important that they can see what your plan is and what you are trying to achieve. The other piece that we have, which is probably more relevant to a diversified conglomerate than this audience, is really the deciding which businesses you're going to be in and which businesses you're not going to be in. So I'm not really going to talk too much about this part of the process. However, what we have, and the key takeaway from this slide, is we have a holistic model and one that provides a feedback mechanism. So we have a plan, a rationale for why we're going to be in the businesses we're going to be in, why we're going to serve the customers that we're going to serve, and which markets we're going to play in. We use that to translate that into a financial budget. So a clear set of numbers and targets and objectives for the upcoming year and for the next 3 to 5 year cycle, and align that with a performance management system. The third area is really around risk management, which I think is probably one of the areas that is most relevant to this audience. In any trading business, and we have an agricultural commodity trading business, we have an energy trading business, one of the key things we are looking at is understanding of risk. what is the risks that are going to impact this business? Are they aligned to the group's expectations? Okay. Now, we are not trying to enter businesses that have no risk. Okay. Generally, I'm sure you've heard the adage of low risk, low return. What we're trying to do is we're trying to go in business and enter businesses where the risk is understood and it is manageable. Okay. Or at the very least, the risk is aligned with the board's expectations. So it's more important to understand the risks and manage those risks as opposed to look for businesses where there are no risks. So these are, in summary, the kind of 4 areas that we've used to drive ourselves from being a restless entrepreneur to becoming a disciplined entrepreneur.